How's it going? Gonna let the room fill up a little bit. Let some people fill up, come into the room, so we have as many people here as possible before we start. Hope you're all well. Sorry that we started a little bit late. Just had to sort out a few little things. Um, can I just check that? Can I just check that the sound is okay? Can you hear me okay? Can you hear? Can everybody hear me okay? Okay, let me see if I can. Is the sound louder now? Okay, the sound should be fine now. On its loud as possible, so I'll bring the mic a little bit closer towards me. Everything okay with the sound now? Okay, cool. More people in the room now. So you can all hear me perfectly now, yeah? Yeah, it would help if you turned the volume up on your computer. That would help it out a little bit. So it sounds like everything is okay and everybody can hear me quite well. Don't want the mic to get in my way, so I can't have it too close. So yes, I hope you're all well. So this is going to be recorded, guys. So for everyone that can't be here, or all of you guys that are here, can watch this. Can watch this again and again. Watch it back and play it back. And as I said, once a month I'm going to do a webinar, which is going to be specifically on certain subjects. So we'll specifically cover, like we did last time, how we done top-down analysis, and we done monthly key levels, monthly, weekly, daily. Now we're going to, I'm going to take it to the next step. So step by step, there's so many different levels of trading, different steps, different steps, different levels that we need to keep adding. So we got the foundations the last time. We got the foundations with the key levels and the monthly levels. Now we're going to take it to the next step. So we're going to slowly build little bit by little and adding everything together so that eventually we apply everything that we're taught and everything that we know and add it to the market daily. So we've got the foundations. I touched on trend lines in the last webinar, so I'm going to talk about trend lines a little bit more and also talk about a very powerful and a very useful little tool that I've spoken about a few times. Regarding the breakout strategy, which is a very, very good place to get an entry on the trend line. So I'll run over that, and it's a very good place because on the trend line touches is where we get the change in a trend. So we get in at the very start and the very end, or at the very beginning of trends. And by using this little tool, I'll show you how it works again and again and again. A lot of people who have who have been in the group for a little while, since I told the group about the breakout strategy, use it a lot, and they've been sending me their own trades and making a lot of money from a very simple strategy. So I'm just getting distracted by some of the questions. I'm just keeping an eye on some of the questions. This isn't like a live where at the moment, if you keep asking me to go through things, I'm here to show you some specific things today and teach you some stuff. So I'm not just randomly going through different pairs. So I'm going to stick to one pair today, and it's going to be Euro AUD because it's a pair that we've traded quite a bit. Someone keeps saying GBP USD. We're here to learn something today. I'm not going here just to go over loads and loads of pairs like we do on a daily basis. I'm here to teach you some stuff today, so you can take this onto your trading, and then apply it and improve your trading. We'll have some questions and answers at the end. But as I said, I'm going to stick to one pair today, and that we've traded a lot recently, which is Euro AUD. I want to show you how important trend lines are, and I'm going to go from the foundations that we've done last month and take it to the next step, which is trend lines. So I'm going to flip over to the charts now, and I'm going to show you the Euro AUD. Okay, so you guys should be able to see my Euro AUD chart now. Can you all see that? Okay, can you all see my Euro AUD chart clearly? Okay, cool. So last time we went through monthly key levels. As we know, on the monthly, we can have the monthly key levels. And just to begin with, what I explained last time was when we're looking at monthly key levels, we're usually looking for around the 1,000 pip range. As a rule of thumb, it's not always exactly that, but in general, we're looking for something around the 1,000 pip range. So you can see here with Euro AUD, we got the 1,000 pip range. So let's say we got 1.6000, and we can highlight that as a monthly key level. And then we had 1,000 pips from there. We had the 1.700 level, as you can see. Now you can see on my chart that there's actually levels in between. So we know that by taking the Fibonacci tool that we used, or just using a calculator to work out the middle of the 1,000 pip range, we got the 50% here, which is the middle of the 1,000 pip range, which is 500 pips. So what we can see here, if I just highlight this blue, this is the weekly support or resistance level. We just highlight this another color for a minute. So you can say, I'm just using these colors temporary, but you can see the red is the monthly, and red is monthly resistance here, red is monthly support, and then we've got this, let me just get rid of this for a second. Then we've got this blue line here, which is the weekly support here. Some of you have also asked me that I've got on some pairs that I've got extra support and resistance. Now what that is some pairs work to 500 pips, some pairs work to 1,000, but then there's some pairs that you can also divide that up again and make it, say, and split it in between 250, because pairs work in stages, they work in sort of steps. So for instance, if we drop down to the weekly chart here, you can see here what I've done here is see between 550 and 6,000, 550 and 6,000. You can see how I split it again and got a daily level. So on the weekly chart, let me just clear this off and start from the beginning for you guys, just to make it nice and clear. So you can see here we've got the key levels here. We've got 7,000, we've got 1.6500, and we've got 1.6000. So from these levels, what you can do is you can also use this 50% Fibonacci tool to then find another level in between the weekly to find a daily support and resistance. So if I just add this on again in between the two monthly key levels and use the 50 here, you can see how we can then we can split those up, divide it up again, and find a daily support and resistance level. So you can see here we've got daily resistance and resistance, support, support. And you can see if we just split that up, now we've got, instead of 1,000, so let's just say we had 1.550 in this level here. And 1.6500. Then we had the weekly level in between. Let's just do this green for the moment. I'm just doing this as an example, guys. So we have the monthly in the light blue levels. Then we have the weekly in the middle. Then you can see how we can divide that level up again in between to get that daily level in between. Do you understand what I mean by that? I'm just looking at the comments. Can you understand what I mean by that? So basically, you have the 1,000 pip range. We divided that again in the middle for the weekly range, and then you can divide that again to get the daily range. So you can see how it works. Okay, thanks. I can see that the feedback there. So as explained, you can see we got the monthly levels, we got the weekly level, and then you can split that up again to make the daily level. So you can see now on this pair, you can see here we've got some nice daily levels. So I've just split this up now in 50. So we've got 1.550, 1.5750, and you can see how the market respects these, especially if we drop down to the daily chart. You can see how well on the daily we respect these levels. So you can see now how price kind of moves in steps. So with a trend, we always move up, down, and we have to go higher. To go higher, we have to come lower to go back up higher again. So we can see here how well the daily, how well price reacts to these different steps, these 250 steps of Euro AUD. GBP USD is very similar with 250 pips. So it's just a matter of, on different pairs, just doing trial and error. So you start with 1,000 as your main sort of barrier, as your rule of thumb. So you have your 1,000 pip from monthly to monthly. You divide the 1,000 into 500 to get your weekly level, and then you can also divide the 500 into 250s, and some pairs you can even divide the 250s once more into 125. So plot those lines on. Sometimes it can be too many lines, so you don't need too much, but just as a tool, just try and use it and just see how that works. Now, so that you don't have too many lines on your chart, for instance with Euro AUD here, we don't need too many lines because it will just get too much. So these ones here we can delete. These ones we can delete because they're not coming into use anytime soon. This is the daily chart. And just like I said, we can see here we've got 165, 1.6250 and 1.600. Again, like I said, you can split these up again. So let's just try that out. So use the Fibonacci tool. Use it over here so it's a bit more clearer. You can use the Fibonacci tool just to find the middle between the two. Pull it on the 50. Get rid of the Fibonacci, and then again you can see how well it sort of works out. You can see that price does respect it here. You can see we just split it up again. So we've gone from 1,000 down to 500, down to 250, down to 125, and it works on a lot of pairs. So it's just another area of support and resistance which we can add to our chart. So here we can see if we just add this to the 50 level, now get rid of the Fibonacci, you can see how clearly that works. So you got here nice resistance, a nice area of support through here, and it's because the market likes to move to these round figures or these round numbers and not in between. So for instance here, if we're at, let's just double click on this and look at the coordinates, we're at 1.6250. Market wants to hit levels like this and before it reverses, not to hit levels like 1.6232. It wants to push up and hit those round figures of 50. So if we know that and we keep splitting up our monthly key level down to weekly, down to daily, and even 4 hour, we can see that how price reacts strongly to these sort of round figures here, as you can see on the bigger picture. Then on the 4 hour, we drop down to the 4 hour, we can also see how price reacts to these sort of levels as well. I replied to some of your messages at the end, some silly comments in there, but I'll reply to that at the end. So that, I just wanted to quickly run over AUD again. I don't think I can make my screen any smaller of myself, unfortunately. I'll have to look into that for next time, but this will be saved so you can watch it again and again. But yeah, you can see how well that works. That's a really good trick. So you see a lot of people that have monthly key levels very similar to ours, but as I said, you can split them up, and you can see how well the market reacts. People are saying, "Can I share my levels?" My levels are there, 1.6500. They're all here on the screen to take a look at and add them to yours. So you can see how well that works. So again, looking at Euro AUD, again, we don't need to have loads and loads and loads of lines on our chart, because it just clogs our kind of vision, gets in the way, and gets a little bit messy. So what I like to do is delete some of these and only keep it to what's most important, what's necessary to look at, which is the key levels around here. If I just go back, maybe we'll keep on this level, because if we break this support, this is the next level that's important. But if we break above here, this is the next level of resistance that we want to worry about. So this is what I keep in mind. Rather than having loads on my chart, I like to keep it nice and clean so that we can actually see price action properly and see what's happening. Now, that's the main foundation of the charts. That's the getting those monthly levels, weekly levels, daily levels. That's the main foundation. Once you get that, you've got the foundations. Imagine you're building a house. You want to build from the ground up. So you have to get those foundations right first. Understand how to get support and resistance. Once you got that, then that's step one. So step two then is trend lines, which I'm going to go over and show you today. So I'm just going to use a clear chart for to run over the trend lines here on Euro AUD. Sorry guys, I'm just looking at trying to change the camera option. I've changed it to just the screen. Can you hear me now? Okay, can you all hear me now? And can you see the screen, the full screen? Okay, cool. Okay, cool. So just because it's just gone back to full screen, I'll just quickly run over what I was saying again, just so you can see that clearly. Um, with Euro AED, purely sticking to this chart because we've been trading it so much recently. And I'm just looking at how to show you some trend lines. I had a quick look at this before the webinar, and I saw some nice things to go through and show you. So, as I said, Euro AED, we had the 1,000 pip range. If I just go back and see if I can get all those levels back up. Gone too far back, so I might have to redraw them on again. Sorry, that's not your computer going mad. That's just me trying to get back up some of my levels. So we can see here we had 1.600, 1.6500, and we split that up and we split it up again, just to help us get those different levels and just to show us how the market likes to move in steps. So it likes to move 125 pips or 250 pips, pull back 125, go up 250 pips, pull back 125. Market moves in sort of in sections. So it's like steps. Like if you imagine steps on a ladder, you step up, step down, you step up, you step down. And it's really important to understand that, because when you're trading and when you're looking for entries and you're looking for market structure, which is something else I'm going to go in today, and you're looking at higher highs and higher lows, it's quite important to understand how the market moves in these sort of steps. And also, if you've got these levels marked out, for instance, when prices moving up here and breaking through resistance, you can see we come back as support, push up. You know that we got this resistance level here, so if you got this resistance level marked out, you're one step ahead of the game already. Pushing back down, you know we got support here, and so you can see that we're just consolidating here before another move. So it's important to be able to map out these levels. Now, going back over to my clean chart. So what I wanted to show you is trend lines. So we kind of spoke about this in the last webinar. And trend lines, guys, are very, very important. So again, foundations is support and resistance on the monthly, weekly, daily, 4-hour. Now listen to what I'm saying carefully, because it's important. Monthly key levels, as we know, when we've got our monthly key levels highlighted, they're the strongest levels because it's monthly. The higher the time frame, the more stronger everything is. That goes for support and resistance, that goes for trend lines, it goes for candlesticks. So on the monthly, the key levels are the strongest. Then on the weekly, they're a little bit weaker but still strong. Daily, they get weaker but still strong. And then on a 4-hour, 1-hour, and so on, they get weaker and weaker and more likely to be broken. That is the exact same with trend lines. So what we got here is a Euro AUD, nice clean chart. And sometimes a clean chart is all you need when you know what you're looking for. But keep it nice and simple, and combine the key levels along with trend lines, and then the other stuff that I'm going to teach you. But nice and simple. It's amazing that the results that you can get. So you can see here, nice clean chart. I've got this point at the bottom here. We've got a trend line on here, and we can see on the weekly chart, we ran over this before, but you can see the weekly chart. You can see how strong the weekly the rejections from this weekly trend line are. Now remember, this is a weekly chart, so these moves from here to here are like 1,000 pip moves. Just like when we took that long trade from around here, that was a 1,000 pip move. So you can see how strong the monthly levels are, or the weekly trend lines are. So there's 3 very important trend lines that you need to put on your chart nearly all the time, which are the outer trend line, the long-term trend line, the outer trend line, and the inner trend line. So once we get our key levels with the monthly support and resistance, the first thing that we need to do then, step 2, first thing we need to do is put our trend lines. So if you're looking at the weekly chart here, this is how you would place it. From this wick here, down here, and you put it on the wick, and then we'd go across and see where this goes to. So you can see we at one point in time, price came here, made a point, changed the direction of the trend. So we use this point on the trend line, and we extend, and then you can see how quite some time after we came down and we found support here again, and we pushed off once again. When we find support here, we adjust our trend line to wherever the new low was made. You can see we made a slight little low here, so we adjust the trend line to that, and you can see here we pushed off, and over some time we came back down again and found support. Now I'll go into it in a little bit more detail on the other trend lines, but just while we're here, this is one of the very good tools and strategies to use to get a very good entry or a sniper entry around the trend lines. So around the trend lines is where the trend changes. So you can see we're coming down here and we change direction and we push off. Getting an entry around here, once you develop the understanding on how to do it, this is where you can gain the most amount of picks, because you're getting in at the very bottom of a trend and riding it all the way up to the top of the trend, rather than getting in the middle. Here, even though some people might think it's risky, I'm going to explain this to you in a minute, it's actually very low risk if you know what you're doing, and you've got huge reward. I'm just checking the comments quickly again. So as I said, you get very good risk reward. So here, what we can see is weekly, we come down. So as we're coming down here on the weekly, what we want to look at is drop down to the daily chart and take a look at what's happening around here on the daily chart. So drop down to the daily. And what we can see here is we've attempted to break out. Now I'm going to go over the breakout strategy, which I've explained once in the group before, but obviously we have some new people and I want to go over it in more detail because it's actually amazing at how well this works. If you're patient, take your time with this and use this all the time, it can work on weekly trend lines, daily trend lines, and 4 hour. So what we see here on the daily is we've attempted to break out here. What we need to do is identify the breakout candle. So in this instance, this candle here is the breakout candle. You can see here, this candle here, we've sat just above the trend line. The next candle here, we've broken out. We've attempted to break out of this major weekly trend line. The breakout strategy here is what we do is we highlight this breakout candle. So you can see here, we highlight this. And then what we want to then do is from this time frame, wherever you see that breakout, which is on the daily here, we want to drop down to the 4 hour. As long as we don't, what the breakout strategy is as long as we do not break below this highlighted region, there's a very high chance of a reversal. Now with trend lines, they're more or less like trap lines. I've said this once before, so I'll just draw it on here. What you get is, imagine this is a trend line. The market is trending up. So we're trending up, and then we're trending down. Sorry. We're trending down. We made 1 point. We made two. We're making another point. Let me get rid of this first, actually. So we're making another point. So 2 points here. So most people will know to draw on a trend line. As it's coming down for the second point, we might bounce off, and then we're going to come back down for a third. This is where most people, now that we've made 2 points, point 1, point 2, you draw on a trend line. This is where most people get trapped because they're watching price to come down to make a third touch of this trend line. So from here, some people will be thinking it's going to break and come down, and they'll be trying to take a short trade. like this, and many will be trying to take the long trade from here. So we often get the market trying to trap people around this area. But once you know how the market is manipulated and how it tries to trap you, which is one of the things I'm explaining now, it becomes a very, very good place to actually take a trade. So what I'm explaining to you here now is that the market is breaking through like this, making people believe that it's breaking through. So lots and lots and lots of people take a short trade, but then what it's actually doing is it actually reverses to the upside. But it's the way of understanding and the way of knowing how that works. So what we're doing is basically highlighting this area. We're waiting for that breakout. We're waiting for the 4-hour or the daily candle. And then we know that while we are still trading or consolidating in this range, that we can look at taking a long trade to come back up with a small stop loss, which I'll explain in a minute, but huge reward. Now, the reason being this being low risk is because if this does break out and breaks to the downside by 30-40 pips, we do not want to be in this trade anymore. It does mean that this is actually going to continue and this is going to push down further. So we don't want to be in this trade. But we know that, for instance, let me just clear everything I've done here. Let's go to the real example here. Like here, we've consolidated in this area. Now, like as I just explained, we're watching for price to show rejections from around this area. So now we're dropped down from the daily down to the 4 hours. So we saw that the daily tried to break out. So we've highlighted this area, and now we're watching the 4 hour to see how price action is or what it's showing us. As long as we don't close below this 4 hour highlighted region, so if we don't have a strong close, sometimes we might have a slight close below, but then we pull back up. As long as we don't close and break below by about 35-40 pips below here, because obviously what we always often get is a little spike to the downside here, to try and force people to go short first, and this is often some place where we can get that sniper entry. As long as we don't close 30 or 40 pips below here, so let's just say rule of thumb is 40 pips below here, then we are good to look at taking long trades. In this instance on Euro AUD, we saw one push to the downside, we saw a second push to the downside, which was a double bottom with a bullish engulfing, and then we even had a third push down to the downside. So we had a triple bottom here, which was a nice confluence. So already we know, for us, we know that this is we've got a trend line here, trend line support. Price has tried to break through on the daily, but we know that we're watching in this area to look for buyers as long as we don't close below this highlighted area. Then so now we're looking for candlestick formations, or we're looking for candlestick recognition, which is going to be the next step after today that we'll go through. But here we can see we've had one push, two push, three push, a triple bottom, which is a good sign for us. Even if we drop down to the 1 hour chart, we can also see we had lots of signs here. We had that triple bottom, we had a 3-pin rejection here, we had the tweezer bottoms here, and then we had that 1 hour bullish engulfing. So on this trade is where we took a long trade, and then you can see here, by taking that trade and then taking some profit after 100 pips and then allowing the trade to carry on and just let it do its thing, you can see how this trade went up to 1,000 pips. Now I'm going to show you why letting the trade continue, taking some profit and letting it continue to do its thing, why that's so important, by giving you another example on Euro AUD. Just want to see, does everybody understand what I'm saying so far? I'll answer some questions at the end, but I just want to make sure that you're all following that. Okay, cool. So that's a nice example on the weekly here for um, Euro AED. Now, what I want to do is go back to the very beginning of this trend, just to try and give you an understanding of how trend lines work. Let's get rid of this. And what you need to do to trend lines and what you need to do to adjust just your trend lines. So, as I said, apart from monthly key levels, trend lines are the next most important thing because they act as support, they act as resistance. So remember, the monthly key levels is support and resistance, which is giving you structure. So you know where your resistance levels are, you know where your support levels are, whether you need to divide that by 1,000, divide it by 500, 250 or 125. You need to play around on each pair to see. Each pair is a little bit different. It's trial and error. But that's your support and resistance. Your bread and butter, the key thing, the foundation. The next level is trend lines because that is again support and resistance. But it's not only support and resistance, it's giving you direction. Knowing what your trend lines are, which is the second step, it gives the market, it shows you the makes you helps you understand the direction of the market, which is the next most important thing. We've got support, we've got resistance. Now we need to know which way the market's going or what it's intending to do. So I'm just going back here on the weekly. Let me go back to the daily chart on this. I just want to follow this market with the trend line just to show you how powerful they are, and especially to highlight the way that we trade and to show you how our trading can get you so much with a smaller risk and its huge reward. So let's go back to this point. So we've got this low down here. We've had a big push down on Euro AUD, and we can see here we've got this push down here. We've had this next push down, and then we've come up, and you can see here we've got this sort of inverse head and shoulders. Now, how many times do we see inverse head and shoulders all of the time when we're looking at reversals? Head and shoulders is a reversal sign. Inverse head and shoulder. See here the left shoulder, the head, and the right shoulder. Now, that's not what I really want to get into today. It's actually the trend lines. So let me get rid of this. What we look for when trading the trend is from here. We've got 0.1 here, and then where the market goes up, the market's pushed up. The market's pushed up here, made a high, then it's come down and made a low, and then it's pushed up from that level. So see this green candle means that the trend is changed direction and we've pushed up. This point here is the second point on the trend line. I'll drop down to the 4 hour in a minute just to show you in more detail. Actually, I'll do that now to make it a little bit more clearer. Sorry guys, give me a second. So when we're finding a trend, any 2 points make a trend line. So 2 points, 2 points make a trend line. So any 2 points can make a trend. So here we can see we've got 0.1. We've got 0.1 here. Price pushed up. Price came back down. Pin bar, and we pushed back up. So you can see the direction changed here. So this is our second point. So we can put a trend line on here. There we go. So we've got 0.1. We've got 0.1. We've got 0.2. So even though price didn't come down to hit us here, what I'm going to highlight here as we go along is the breakout strategy. What we want to look at, so this is just over here. What we want to look at, or what we want to identify, is the breakout candle. This is the breakout candle here. We've tried to break out. Here we come down, found support, but this is the breakout candle. So what we do is we get a highlighter tool and we go to the bottom of that breakout candle. We go to the bottom wick. So for instance, you can see here, It doesn't really matter about where the top is. We're mainly concerned about the bottom, but I'll just highlight this, make it a little bit of a better color, so it's not so severe. Let's just keep it green. So we can see here the bottom here. So on the 4 hour, we've got very, very simple setup here. We've got point 1, point 2. We wait for price to come down to point 3. We found some rejection here, but we wait for the price to break out and attempt to break out. We highlight that breakout level at the bottom of the wick, and then we wait for price to then show us whether it can break through that or not. If we are patient and wait, you can see we had this pin bar. We can see price broke out below and then closed back up inside. You see we came down, found support on this level again, couldn't break, found support again, doji candle here. So you can see price is slowed down on this downtrend, and it can't manage to break through. It's on this downtrend, but it can't break through this level that we've got from this little breakout candle here. So now that we know this, if we were to enter here, have a say a 40 pip stop loss, then we know we're risking 1%. But we are in an uptrend, making higher highs, higher lows, higher highs, higher lows. Haven't managed to make a higher high, but if this is to continue and go higher and make a higher high, then we know our risk reward is very, very big. Then we apply also Fibonacci's and stuff, which is all going to come in future webinars. But today is about trend lines and just understanding trend lines and this breakout strategy. So here we can see this. Now that you've seen this, you can understand how price couldn't break below this breakout candle here. This is the breakout candle. So you can see that support. If we drop down to the 1 hour, actually can't drop down because it's too far back. I was trying to do this earlier. Sorry guys, just bear with me for 1 second. Price is too far back, so I couldn't bring it up on the 1 hour. But the 4 hour is all we need for the moment for the direction. So as we can see here, we couldn't break below this, and price pushed back up. So had you taken a nice long trade here with a nice little stop loss on the third touch of the trend line, which is another important thing, you can see how many pips we would have made here. We've gone from 1.3700 up to say 1.4, so that's about a 300 pip trade. Now the other thing that's very important, which I keep explaining, is 2 points make a trend line. The third point is the strongest. This is the make or break point on a trend. If we bounce from that point, we normally see a very, very big push like we did here, point 1, point 2, and a very, very big push off from here. Otherwise, we're going to break and fail this trend line. But the third point is usually where we're looking at taking an entry. I'm just having a quick look at the comments just to make sure everyone's following and everyone can still hear. Someone said these are some real gems. I hope that you understand how good this is. You can all hear okay, yeah? And understanding this so far? So I said I did go over this briefly before, and the amount of people that have shown me their own trades from this, like I think GBP JPY done it yesterday, GBP USD done it. There's a few. It happens again and again and again, and there's a reason why, which I'll explain to you shortly as well. Because the next step after trend lines is market structure, step 3, which I'll go over a little bit with you today and go into more detail next time. But yes, it happens. This happens again and again and again. And this breakout strategy, you'll be amazed after today. I hope that you guys are sending me sniper entries non-stop. So let me just go through the next stage. So you can see here, third touch here, had a little breakout, and we pushed back up. The next important thing to do is to keep adjusting your trend line all the time. So when we make a new low here, see this, the bottom of this pin, that becomes the new trend line. Or sorry, not here, this does here. So you have to keep adjusting the trend line all the time. So then we extend this, and let me just zoom out. So we extend this. Sometimes it can get tricky, but we'll go with this. We'll just see what this throws at us and see what we have. So now we got, this was 0.3, because this was 0.1, this was 0.2, this was 0.3. Now that we adjust this, because this came lower and changed the direction, this is now 0.2. So see, we've got 0.1 down here, this becomes 0.2. So then price moves up, and then we can wait for it to come back down. Now, I'm just going to veer off from this slightly. This now shows you where there can be other trend lines as well. This is the inner trend line. This is the outer trend line. This is the inner. Note this down, that the inner trend line is weaker than the outer trend line. The more inclined, or the more steeper a trend line is, so if you can imagine that's the middle. If a trend is going up like that, it's bound to break very, very soon. If a trend is going up like this, it's still very, very steep. It's going to break, but not as soon as a trend that's going straight up, or just slightly from straight up. The less steeper, the less inclined that a trend line is, the stronger it is. The more sharper the price moves up, the more chance it's going to pull down. So we do get 3 trend lines. At the moment, this is the outer trend line, this trend line that we're talking about here. This is the inner trend line. So you can see here price has gone up, and the reason that there's an inner trend line is because we've had a pullback, and then we've changed direction from this level, and as I said, 2 points make a trend line. So now that price has changed from that level, we have an inner trend line, because prices moved from this level, so we have a trend line on here, and prices move from this level, so we have a trend line coming across here. But as you can see, this is steeper, and it breaks easier. So here you can see, let's just use this tool. There wasn't really a breakout candle because we didn't break lower, but if we just highlight this for instance, you can see here, once we break below, we came back, retest. You'll see this a lot as well. When you break through this breakout strategy, this highlighted tool, we often come back for a retest, and then it pushes back down. So you can see here how we broke through that. So we identify this as the breakout candle with that wick breaking slightly lower. Highlight this, we can see now how then price closed below, and then it continues lower. So if price closes below, we don't want to be in that trade. We know that it's going to continue in the downtrend, and we want to get out fast. That's why you have to have a stop loss, because if we break lower than this, then it normally starts moving very, very fast. We want to get out. So now this is invalid. You can see we've broken this inner trend line, very weak, and we've broken. And now let me go back quickly. I've explained this before in the group. When we break the inner trend line, the next target is to come out to the outer trend line. When we've broken this, we're kind of magnetized to come out to the outer trend line and find the next support. Obviously, we have support and resistance levels, but trend lines are very, very strong, and we normally want to come out and test the trend line in order to find out if we're going to continue in the direction of the trend, or we're going to change direction. So we've got rid of this trend line now, and you can see here we've attempted to break out. We can't really see this on the 1 hour because I can't go back that far, but you can see here on the 4 hour, if we drop down to the 1 hour, you probably see some consolidation within this level, and we push back up. We haven't been able to break below. Also, that level has come over to here. Actually, let me get rid of this. But you can see here, we come down, third touch of the trend line, regardless of the breakout strategy, dropping down to the 1 hour. You can see here 0.1, 0.2, 0.3, and how strong it is. So we've pushed up, had a nice little push up, but remember, once we change direction here, we now need to adjust the trend line. We need to adjust this trend line, sorry, because the market still has changed direction from here. So if we come down, we push back up, and now we're coming back down. So here we can see that we're trying to break out. So here is a little bit more trickier. It's actually because there's a bigger move. But here, what you need to do is, here we've sort of got a breakout candle here. This candle here, this doji candle. So we want to highlight this level. And you can see here that we have had this little breakout to the downside. Now, sometimes this will, you have to get some getting used to it. We can see here that we do have the support just below us. So the previous support. So price is broken out. But if we have a nice 40 pip stop loss, let's just have a look here. So if we're looking at taking a trade from around this level, we have a 40 pip stop loss. 60. You can see that we would have been safe there anyway. But also, what can you see here? We've hit the form of support, and we got this morning star formation. So if you were just waiting and you saw this breakout to the downside, then you saw a doji, then you saw a 4-hour push back up into our highlighted area, our breakout strategy box. 1, 2, 3. Then from here, we would have known this is 0.1, 0.2. This is 0.3 of the trend line. We've just had a morning star formation off the form of support. We're back inside our range. We can press the buy button, keep our stop loss here, and then you can see once again we moved up to the upside. So again, from down here we could have had 1 trade, 2 trade, 3 trades here, I think it was so far. So you can see how well this carries on working and how well we can identify what is happening at the trend line points. So again, from here, because this broke down and the trend changed direction from here, what do? We adjust the trend line. So now I hope that looking at this, you're probably thinking you can't believe how well this works. Because now we've got, what do we have? We've got 0.1, we've got 0.2, and we've got 0.3. What I'm showing you here, guys, is like gold dust. Just to get some water. This is only step 2 of what I'm going to be showing. What I'm showing you. This is step 2 on top of the foundations of support and resistance. So here you can see we've had this trade from down here. Let's have a look. Myself, you know me, I'd still be holding this trade. I let it run. I'll explain about how to move stop losses afterwards. But remember, this was the first trade down here. The third point here, or whatever it was. So we're trending higher, we're trending higher, we're trending higher. We're now at this third point here, but we've already reached these highs up here. And so if you place your trade here and your stop loss was moved to break even, what you then want to do is, once they make a high and make a higher low, and then we make a higher high, you want to move your stop loss underneath the last higher low, underneath this level. But we'll go through that shortly. But what I'm trying to get at is here, you can see we've gone from 1.3700 to 1.4300. That's 600 pips from something so simple. Can you see how that works? You small risk, placing that 1% risk, and then you can see here you've got what the reward is. It's massive. Let me just get rid of this. For instance, even if you had a slightly wider stop loss, let's just say about 50 pips or 100 pips, you can still see here that is 13 to 1 risk reward ratio. Anyway, let's get back to it. So we've just explained that we've gone from here, we've had that morning star formation, which I keep teaching you, which is very, very important. Off support, candle recognition is going to be one of the next steps that I bring on one of the next webinars. Here we then change the trend line. And now we can see this is 0.1, this is 0.2, we've got a new 0.3. So we're at 0.3. What do we do now? Identify the breakout candle, which is here, yeah? This one. We've identified that. We get a highlight tool. And we wait. So you can see here, once you get to know this is how you, one of the things that you can get sniper entries. If you're patient to wait, we know a lot of the time we get manipulation spike to the downside. This is why we have to have that 30-40 pip stop loss, like I said, because we will get pushed to the downside. But once you get the sign and you see what we're looking for, like for instance here, a spike to the downside and a 4-hour pin bar, very, very strong, we know we can take a long off that and put a stop loss just below. But again, what I'm trying to explain is you can see here we've failed to break below that breakout strategy. On the 4 hour, we've tried to break out, fool people, most retail traders, to take a short. I'm sure we've all been there when we first learned and so on. Think, oh, the market's broken, the trend line, I'm going to take a short trade. And you jump in, and then all of a sudden, bang, it hits your stop loss straight away. Very frustrating because the market knows what 90% of the retail traders are doing. Make you think that the price is breaking lower, especially on this candle when it was fully red and it was all the way down here. People would have jumped in, then bang, it moves the other way. So you can see here we failed to break out. Once again, pushed to the upside. So we're looking at here, we're looking at taking long trades from anywhere around this level with a 40 pip stop loss. Now we're off again. And then look how far we've come. We've come from here up to what we from 1.3950, about another 300 pips from down here. 40 pips stop loss, a 7-to-1 risk reward ratio. Fairly simple now that I'm pointing it out to you, isn't it? Okay, so what do? We get rid of this, we get rid of this, and we adjust our trend line to this new low. And then here, there we go again. So here, as I said, sometimes it will get a little bit trickier. Here we can see we've now got 0.1, we've now got 0.2. Here is the breakout candle. Sometimes it won't always be 100% perfect. The market is very difficult and wants to play around with us. There's the breakout candle. So we highlight that, and we can see here price has broken down, pushed back up, really nice rejection here, came back down. Let's see, is it 40 pips? 18 to 82. It's just around 40 pips. But you know, the risk reward is so good on this that you can allow yourself maybe slightly more if you're only risking 1%. So 20, 40 would be 80. So that was actually just missed the 40 pip rule, but from the start. But so you can see it's very, very close. Even if your stop loss did get hit, there's other chances to get in. But you can see here, having that 40 pip stop loss, if you're only risking 1% of your account, 50%, 50 pip stop loss, doesn't really matter. But you can see again, markets come down, try to fool people. You'll see this sometimes, that it does try to trickle down and fool you into thinking that it's going to break. Obviously, you wouldn't want to be in the market when it's coming down like that, so it's better to be out, unless you have taken a trade and you leave your stop loss there. But then as we push back up and we get back within this level, and you see price reject this level again and that 4 hour pin bar, then we know there's about to be a change. Also, we start throwing in the other things that we know. We can see that we have support here. This is kind of support level, left shoulder, head, right shoulder, and then we push up. So you can see how this keeps working, it keeps working, it keeps working. I'll just zoom out on the 4 hour, and then we adjust this, get rid of this, get rid of this, and then we're off. So if you took that long from there, now look at where you are. Let's just zoom out on the 4 hour. Look at where we went to. It was ridiculous. But remember, when we initially took the long from down here, look at where you could be. Obviously, you take partial profits along the way, but you can see how many pips you could have. You can have over 1,000 pips there, or 1,500. It's just people can't understand that, or can't see that there's so much more that it could go to over a long period of time if you're willing to hold the trades and let it go. So here we can see we've got this 0.2. We've then eventually come over. We've had 0.3 over here. But in that time, then that's where we find our inner trend lines. So you can see the steep inner trend line here. So we took off from that point that we just spoke about with this inverse head and shoulders, pushed up, came back down, market changed from this direction. So that gives us our second point of the trend line. Let me bring this back down a little bit. That gives us our second point. So price is pushed off from here, pushed up nicely. So we put on our trend line and we pull it, extend it into the future. Then price comes back down. What do we have here? Let's zoom in. Instantly, we can see a 4 hour morning star formation. When this broke out on the 4 hour, there would have been a breakout candle. Dropped down to the 1 hour. we would have seen that price couldn't break out at this level, look for a long trade, and we're off again, back up to the upside. Then let me just come back out. We adjust this. We can see here, price came up to here, breakout candle here. Highlight that. You can see that price couldn't break below that highlighted level. Couldn't break through. Lovely entry to take a long trade. Literally minimum stop loss, sniper trade. Then we're off again, back up to the upside. Then we adjust this, and so on and so on and so on. So you can see there how many times it worked. Let's flip back to the chat quickly. Does everybody follow that? Okay, cool. So you understand that. Okay, so you can see how something very, very simple you can see how something very, very simple. That's just me showing you that one strategy with trend lines. Now couple that up with support and resistance and monthly key levels, then it makes it even better. Then once you start averaging Fibonacci, which I know a lot of you guys know about, but I'm going to go into more detail about. For instance, something like this, coming down to the 50%, then we look for taking profit at the extensions and so on. Fibonacci, I'm going to go into another day, but you can see how well that works. So let me just go back to the daily. So yeah, that worked again and again and again. I'll show it to you now that I've made it clear on this webinar. Just remember that 2 points make a trend line, 3 point, a third point is the strongest, the make or break point. So now that I've gone through it in great detail on this webinar, when it comes up on a day-to-day basis, I will highlight it and explain it. So that worked on trend lines. That tool also works on support and resistant lines as well. I'll go through that on one of the next webinars, and it helps us get very, very, very good entries. So let's just have a look. Let me get rid of this. Let's just have a look at where we are now, just using this and see how Euro AUD is looking. So we've got, as explained, we had that fake out there. Very nice little tool. We watched for the fake out, took that long trade, held it for 1,000 pips up to the upside. Let's drop down to the 4 hour. So, sorry, let me just adjust this quickly. Trend line's too far away. So we adjust that trend line now to the new point. Drop down to the 4 hour, and let's have a look. So the outer and inner trend line works both ways. So at the moment we're looking at an uptrend. So from here we can see this trend line. We have 0.1, we have 0.2. So we've got 0.1, 0.2, came up, had 0.3, nice rejection, pushed up to the upside. Then we pushed down, had this breakout candle, and this is a good example of when it doesn't work. Obviously it's not about it working, it's just highlighting to see if price stays within it. If it doesn't, it also helps us understand that price is going to continue in the other direction. So also it helps us take a trade that way. So we can see this is the highlight, this is the breakout candle. So we highlight that, and in here we can see that we're waiting. We can see here that we've had a breakout on the 4 hour candle to the downside. As explained, even if you did take a trade here, just say after one of these candles, when price comes down, when price breaks through, we normally always come back and retest this level. So even if you want to get out, then it means you normally don't take much of a loss. So if you had taken a long trade at the bottom of this and it pushed down by 20-30 pips, it comes back up, you can get out at break even or at a small loss. But at the same time, as I said, if price breaks below, like very, very strong here on the 4-hour candle, 4 hour shows it's very good for knowing the direction of the market or what way it's going to go next. You can also look at taking short trades. So we see this nice break here. We've seen resistance. We can also take a short trade. We can a short trade here and then let it roll down and come down lower. As I said, that shows you how it doesn't work. We just look at that on the 1 hour. We can see we've had that strong break on the 1 hour below this sort of region. So it's show that this isn't going to hold and we're not going to push back up to the upside and that the trend is going to continue going down. So even if you're in a trend as well, like we are, but if we took a short from up here and we're thinking about taking a new trade, just by seeing this situation play out and seeing this break below, it confirms to me holding this trade from up here, it confirms that we are going to push lower. So I'm happy to hold my trade and let it continue trend down and trend down and trend down. Now, if we also look at this, so this is now invalid because it's broken. We also need to look at outer and inner trend lines coming from the opposite direction. So for instance, we have this as an outer trend line. So we can see here, actually, if we go back, this is a very important why you have to keep adjusting your trend lines. So let me just clear this away. We've come down, we've made a high, and the market's pushed away. So this has given us a second point. We can put a trend line on here. We can see then prices come back up, but this is all sort of collectively 1 point. But you can just see here how it works as well. So if you just look at it, look at this here, we've got 0.2 on the trend line because price has moved away. It has pushed away and changed direction. If we highlight this 4 hour breakout, drop down to the 1 hour, you can see how we felt and then we broke back down and continued on the downtrend. Now, what do we do here? We delete this and we adjust the trend line. And guess what we have? Go to the 4 hour. We have a breakout candle trying to break through here. See this candle here or this candle? So what do? We highlight that level. Highlight that level, drop down to, because it's on the 4 hour, we drop down to the 1 hour chart. And what do we see? We see a doji candle, and then we see a spike to the upside, manipulation just to take out any one hit above there, and then push down, 1 hour bearish engulfing. We push down and we start to trend down lower. So you can see here, 0.2 on the chart, 0.3 on the chart, and you can see that rejection. And then if you're taking trade from here, guys, you're taking a trade from here. Stop loss would be above this high. In this instance, on the lower time frame, because we've got resistance here, we would have kept it a little bit wider, so just above here. But then you just let it run. You take some profit and you let it run and you let it do its thing. Hedge trading then, where we take trades in the opposite direction, which I'm kind of looking at Euro AD at the moment, is another subject for another day. But you can see here, we now adjust that so to this level, and we may come back up and test that level once more. We may come back up to test this level again, and from here again we can watch for a fake out perhaps around this area. We might look for taking a short trade, or if price breaks through and breaks up, then we can look at taking a long trade. Now that's the outer trend line. Now we need to watch for the inner trend line, which is here. So this was the inner trend line. We broke out of this, but you can see here, a little bit sloppy. We had this breakout candle. See this little doji candle here? Let me just identify it. See that candle? That's the breakout candle there. If we highlight that, you can see how price couldn't break above it, and now we're pushing back down to the downside once again. So now we need to adjust that. We push it out, and we can see here that we're actually coming out and testing this one more time. So I'm interested in watching Euro AD at the moment. We're on the inner trend line. We're retesting it as resistance. We may now get another push to the downside and push through and break this support that we have found here. So identifying the trends and identifying where the trends are changing is very, very, very lucrative for us, because you can see here that's where you get the 1,000 and 1,500 pip trade, whereas rather than jumping into trades in the middle of a trend and where it's more riskier of getting stopped out with price fluctuation and so on. So you can see here that that simple strategy works very, very well. Okay, everybody understand all of that? So I'll answer a few questions. I'll go through some of your questions now. Um, but there's a lot to trend lines, and trend lines are very, very important. Some people say that they're no good. Some people try to make fun of people that draw trend lines and stuff. Um, but trend lines are very, very, very important. You have to understand that. So I know I keep saying it, but I keep saying certain things to drill it into your heads, because if you get the important things right and you do the simple things right, your trading will do very, very well. So foundation level is support resistance. The last webinar, understanding monthly key levels, like I just explained a little bit more on it today, breaking down those key levels into maybe 500, 250, 125. And then once you have your foundation set, you then need to use your trend lines to understand the direction of the market. Is it going up? Is it going down? Using the trend lines, they will identify that for you. They'll visually show you what direction the market's going in. Then we start to add our we start to add our little tools in, the tips and the tricks that I'm going to be teaching you. So last webinar was foundation level. This basically is kind of foundation as well. Trend lines is what everybody should understand, but it's how to trade them, which is a big, big difference. So I've probably touched on trend lines about 60, 70, 80%. There's probably a bit more that I need to go through with you, which I'll follow on to the next webinar. I don't realize how long I take on these webinars. I get so into it and I enjoy showing you guys the charts and talking about the charts so much that that I just lose track of time. So in the next webinar, I'm going to talk about market structure. That's on top of the trend line and following the trend lines. The market structure is the next thing, which I'm sure you should be able to understand. As we're waiting for watching the trend go up and down, making higher highs, higher lows, higher highs, higher lows, and we're looking for entries, the next thing that helps us get sniper entries is the market structure. Understanding market structure and how it works, and also how the market tries to manipulate that. So there's more tricks with that coming as well. So that little breakout strategy is basically a drop in the ocean. There's so much stuff to show you, but you can see how powerful that is. Add that to your trading and start showing me your trades, not just my trades that I show you. Start showing me your own trades with the morning call and evening call that I give you every day. I cover a lot of pairs. When you start seeing things yourself, Start adding the things that I'm teaching you in. Start taking your trades maybe on a lower risk just to get used to it, or maybe don't even take the trade. Maybe just mark it up, draw it on, see if it plays out, and then once it starts playing out a few times, according to your analysis, then you can start implementing it into your trading. Remember, we're here to learn as much as trade, so it's not about um, taking trades, over leveraging, trying to make loads of money. We're trying to learn a skill set here that's going to last you for life, and that you'll be able to make money for a lifetime. So I'll answer a few questions now. And also, I'm going to jump on more lives as well, like I explained about a week ago when I was on holiday. I'm going to jump on live, so sometimes just randomly during the week, I'll just jump on the live. Whoever's free at the time can jump on, answer some questions. We can look at the live market, but it'll always be recorded so everybody can come back and watch it at another time. No, I do not use EMAs anymore. They're confusing. You don't need to use them. I used to have them before, but I realized that they can clog your mind, they can clog your charts, they can make you think about getting out of trades when you don't need to. Basically, they're confusing. The cleaner your chart, the better. Trust me. You just saw how powerful a trend line by itself is. So you don't need to clog your charts and put loads and loads of the different stuff on top of your charts, making it harder to see the price and what's actually going on. London meeting is. I was actually talking about the London meeting with an event manager today. It is in the works, so that's going to be coming soon. I'll give you the details for that. And it's not just London. I'm going to be coming elsewhere in the UK and also in other countries as well. So next year there's going to be ones abroad. So I'm going to be coming to places close to everybody, so nobody is missing out. Um, Obviously, the free meetups is an extra added bonus anyway. But everybody's going to get to have them. We're all going to meet up, and so what I'm trying to do, like I said before, is have them in different cities, have them in different countries, and get people meeting each other, so that people within the community and only people in the community can meet up with other people in the area, and you can sort of help each other trade, help bounce ideas off each other. I done in Portugal while I was there recently. I was in Porto for a few days, so I just sent out a message and said, anybody in Porto come and have a look, or come and meet up. And there was 6 or 7 people in Porto that met up, and they loved it because they got to meet other like-minded people. I think they all exchanged phone numbers. They're going to meet up in the future. They all looked at charts differently, so some knew more than others. So now they're all going to meet up and basically be part of the community. So that's all going to be happening soon. Rule of take profit. So there's going to be a PDF on the website soon that you'll have access to, which is the rules and give an explanation. But yes, our rule is at 100 pips, we take 50% profit, and we could let the trade continue. We keep stop loss at break even after 30 pips profit. As soon as your trade's in 30 pips profit, stop loss at break even. If the market moves against us, we stay out, we wait for a new entry, and we get back in, just in case the market moves too much against us and goes in the other direction. But we always protect ourselves. Toronto, yep. We're coming to Toronto soon. Any tips on entries? Patience. Patience is very important. London meetup next. Yes, London meetup is going to be soon. I'm going to send out the date. I'm going to send out a registration form, so you guys can fill that out. Tell me if you can make it or not, and yeah, it'll be coming out soon. there's a few questions there which are going to take a while to talk about. There's one there that's a few people have asked me to talk about how I begun trading, how I got out of the rat race and stuff like that. I'll on these lives that I'm going to do more frequently, where I just jump on, I'll do it in one of those. This is an educational webinar where I've gone into lots of detail, so I don't want to clog it up, given talking about stuff that's unrelated to learning education. On the other ones that we'll do on a weekly basis, where we have a live, we can talk about stuff and just have a general chat on those ones. Will I do an evening call? You guys want lots. Of course, I will do an evening call. I've never missed one to date since the community opened. Never missed a morning call, never missed an evening call, never missed a Sniper Sundays. So obviously we all need to have a look at the market and see what's going on. So I'll run through the market quickly and put that in a group soon. Okay, cool guys. I think I'm going to leave it there. Will I teach my daughter how to trade like a monster? Candlesticks is going to be her first word. Um, yeah, I'm definitely gonna teach her. Gonna see if she can be a sniper by the time she's about 5, maybe 4. But I'll give her to 5. Okay, cool guys. I'm gonna end it there. As I said, we'll talk about more stuff on the other webinars when we have the weekly webinars. This is a monthly webinar for education. It's been an hour and a half now, so use what I've showed you there on the trend lines, implement that into your own trading, and start showing me your trades and your entries by using that. Just looking through the comments one more time. Okay, guys, I'm gonna go. Have a good rest of the week. I'll do a quick evening call and throw that into the group now as well. So I will speak to you soon.